Inflation soared in November, rising to its highest level in nearly 4 decades. Data from the Labor Department shows the Consumer Price Index jumped 0.8% in November. That is a 6.8% increase from the same time last year. It is the highest rate of inflation since 1982. Supply chain issues, coupled with the coronavirus pandemic, have pushed prices up over the last year. Rising energy costs also played a part. President Biden tapped into the nation's strategic petroleum reserve last month as part of an effort to combat the expense. But so far, that measure has done little to lower the nation's gas prices. On Thursday, the Biden administration tried to get ahead of new information on the Consumer Price Index. In a statement, the president downplayed the data, saying, quote, "The information being released tomorrow on energy in November does not reflect today's reality, and it does not reflect the expected price decreases in the weeks and months ahead." His administration also pushed that line.
That data is by definition backward-looking, and so it won't capture some recent price movements, particularly in the area of energy. And so, for example, prices of gas at the gas pump are now down nationally. They're down about 9 cents. This week, we've seen natural gas prices fall. They're now down 25% from their average in November, and that is good news, particularly looking into the winter home heating season. These declines are delivering, most importantly, some benefit to consumers and some benefits to consumers on a go-forward basis that won't be reflected in that data.
Joining us now for more on this is Sarah Ewall-Wice. She's a CBS News reporter covering economic policy. Sarah, thank you for joining us. So the Biden administration is clearly looking to downplay the November Consumer Price Index. What do these latest numbers mean for the average American ahead of the holidays? And is it accurate, as the administration is saying, that these numbers are actually higher than the current reality?
Yeah, so, prices have gone down since those November numbers have been captured in some places. But the reality is Americans across the country are going to be spending more money as they get ready for the holiday season. They're going to be spending more money at grocery stores up month to month and over the past year. They're going to be spending more on gifts as they buy for loved ones, friends, and family. And they're going to be spending more on travel. The travel prices are going up for airfares, for hotels, for rental cars. And this is really hitting people across the board. The reality is it's going to hit people who are low-income individuals, low-income families are going to feel this more than other folks, but everyone is going to feel this. It is broad-based at this point in time. And, we think this is going to continue. Economists will tell you it's going to continue well into next year.
Right. And as we mentioned at the top, inflation hasn't increased at this pace since June of 1982. You just went through some of the places that we are seeing these increases, but where are we seeing the biggest price hikes?
Well, I'll talk about year to year because you mentioned 1982. And the reality is during in this specific consumer price index, the largest driver of inflation was in energy. That was up 33% from a year ago. Specifically, gas prices, according to that index, is up nearly 60% from a year ago. So that is something to keep in mind. Separately, things like food, often also volatile prices there, up more than 6% from a year ago. What's specifically driving that is including meat, poultry, eggs, fish. Those are some of the highest price increases we've seen from a year ago. But separately, things like used cars and trucks, that has been a continued problem here in the United States. Those prices continue to go up. Those prices are up 31% from a year ago. New vehicles also up 11% from a year ago. And we've talked about this chip shortage in the past. That continues to factor into this But something to keep in mind as we look at this is rent. Rent is something that the price is up from a year ago. It continues to rise, and that is something to keep a very close eye on moving forward into the new year as it's expected to continue going up.
Right. And Sarah, as the president was saying, he has taken several measures which the White House says should aggressively combat rising energy costs. How long is it expected to take until the president's measures are felt?
So we already are seeing some of those energy costs coming down. The price of gas in the past couple of days, couple of weeks has come down. I think the AAA said that the average across the country is $3.33. So still up more than $1 from a year ago, but down in recent weeks. Separately, natural gas prices were referenced. Those are coming down. That is important when it comes to heating your home this winter. If those continue to go down, that's a good sign. But, you know, the National Economic Council Director, Brian Deese, you heard him right before in that intro, he would not actually predict when he expects prices to completely moderate. You know, he said he leave that's pointed to forecasters who said that those are expected to ease next year. But, you know, the Federal Reserve Chair has been asked about this time and time again, and Jerome Powell has specifically said that he expects prices to moderate in the second half of next year. So some of these prices can continue to go up before leveling off well into the fall of 2022.
And Sarah, what do we think this means then for President Biden's agenda moving forward? Will we be seeing some tweaks?
You know, they are confident that they're going to be able to get the Build Back Better Act, which is the social spending agenda, passed. But this does pose some serious challenges for them specifically. You know, Republican lawmakers have been saying for some time now, look at all this spending by Democrats. It's driving inflation. And it's hard to argue against the idea that maybe some of that stimulus money in the American Rescue Plan had padded people's pockets and it helped increase demand now. But moving forward, they're looking at this Build Back Better Act, this thing that addresses healthcare, it addresses housing, it addresses child care, and they're focusing on that in terms of Democrats wanting to get this passed. And they do have some challenges. It's still stuck in the Senate. They're working on that. Chuck Schumer says they hope to have a vote by Christmas on that. But, you know, folks like Joe Manchin have said that the inflation is out of control, and that is something they need to tackle before they move on to new spending. So this does pose challenges for them. Secretary Janet Yellen, the Treasury Secretary, actually sent out a memo yesterday kind of preemptively combating some of this. And she said that the Build Back Better Act would not add inflationary pressures. Economists have said that as well. And so have some credit rating agencies that the Build Back Better Act would not add to inflation. But it is a tough sell when you see prices going up across the board.
Sarah Ewall-Wice in Washington, thank you so much. We appreciate it.
Of course.